And we are live. Good evening, everybody, and welcome to one of the first typical videos of the series, we're going to call it, I feel. We're just getting notifications through on our phones now to say that we've gone live. That's the way we do it. So we are live across many platforms this evening. The most, I think, that we've actually gone live over. We are live on Chris Day's Facebook page. We are live on GoMortgage Facebook page. We are live into the Mortgage Advice Hints and Tips group on Facebook. We're live on Chris Day's LinkedIn. We're live on GoMortgage on YouTube, and we are live on our Instagram page for GoMortgage also. Good evening, Irene. Thank you for joining us. Good evening, everybody. So you may notice this evening there are more of us. We have somebody else here this evening. This is Craig Broomhead. Craig is from Broomhead Financial Planning, and Craig is here this evening to start off our topical series. And tonight's topic is going to be all about wealth. So if anybody has any questions regarding wealth, please do drop a comment in our comment box and we will be starting them off soon as. But first, what I'm going to do is I'm actually going to ask Craig to sort of give us an instruction as to what he actually does and what is wealth, what does it cover, and what could he be helpful with for this evening.
Thank you. Thanks, Joy. So, hello, everyone. So, obviously, Craig Broomhead from Broomhead Financial Planning, and my role essentially is to help people manage their finances to reach the goals that they want in the future. Yeah, we all know that wealth is a complicated subject. It can be full of jargon and lots of long words that even people like myself don't really understand. We have to go away and do a bit of research. So my job is to make all that a little bit simpler and to help you reach the goals that you want to reach further down the line, whether that's retiring early, saving up to buy a house, providing education or a start for your children, or even when it comes to passing that down wealth through generations to grandchildren, children, this, that, and the other once you've passed. So my job is to make sure that we do that as effectively and as suitably and sustainably as possible, and make the process as easy and simple as possible, a bit like Chris does with the mortgages.
Perfect. Well, then hopefully this will be coming through. I'm just looking at here. I'm just going to check for you. Chris is just saying we are in the helps and tips page because I can see we've got viewers from it.
All right.
So yes, that is happening. So if anyone does have any questions, please feel free to pop them in the comment box. And we will answer as many as we can. Or don't worry if it's not wealth related. Obviously, Chris is here, so Chris will also be able to answer anything mortgage related, any questions that you might have, anything that's been bugging you, anything you're not sure of.
Right off for me.
Yeah, ask Chris. I'm just going to go through and check that we are coming up on all of our streams just for the moment.
Or if anyone can put in the comments where you're viewing from, just so we know where you're actually seeing us, that'd be good.
Yes, that would be a grand old idea. I can see that Chris Days is live. I can see that Mortgage Hints and Tips. I can see.
I've got a question from Irene.
Oh, hello, Irene. How are you? Here we go, Irene, then. Let's have your question. I have a death in service plan at work, but do I still need life insurance?
Yeah, so life insurance is going to cover you if you change jobs, isn't it? And it's also going to give you the extra. So it depends what your death in service is with work. Some do 2 times, some do 10 times salary, depending on how long you've been places. And it depends on what you want that life insurance to cover once you've passed. So you can adjust it to suit at times, but it's always good to have an extra policy on top just to belt and brace things, to pass down, cover over debts, to provide for the family if you're not there. So the amount is dictated by the individual and what they want to leave later on, depending on their circumstances. But having a separate policy on top of your death in service, because obviously your death in service can be taken away at any point by the employer if they change contracts or someone else comes and buys out a company. So that's not guaranteed all the time. Whereas you having your own policy, you're in control, aren't you?
What I always say, obviously, from a mortgage point of view, I get people all the time saying, I don't need life insurance, I've got death in service. And obviously, yeah, that's fantastic, but it's designed to do something different. So we always look at like a decrease in term policy for the mortgage, and then the death in service is there to replace an income, because obviously if you die, you're not going to be earning an income. Your household is still going to need an income if you're leaving your wife and kids or husband and kids, whatever it is. Having a mortgage paid off is fantastic, but you can't eat bricks. So you also need money to be able to still do the things that you'd be doing if obviously that income was coming into the household. So you do need a bit of both.
Yeah. Personally, I'd always, as well, me and Chris have spoke about this a bit, not just life. I don't always, if you're going to do a personal policy, always look to do critical illness as well, because we all know we are all going to die at some point. That's a given. Critical illness is the bigger unknown, and whilst your family's going through that situation, if you can have the house covered, everything done, the roof over your head safe, and there's some money there to make sure that you can still live the life that you've got, and the family can live the life they've got whilst you're going through these tough times. Critical illness bolted onto your life insurance is, I always advise all my clients to at least look at it. I know it can be a little bit more cost, but how much is it going to cost you if you've got to move out your house if you're critically ill?
So this is a question that I said to Chris last week. I was in a soft play with my daughter, talking to a friend, and she was saying obviously they got the mortgage. They had their house nearly 2 years ago, and I was saying, like what we deal with GoMortgage, for instance, and they were not one person ever spoke to them when they got the mortgage regarding policies, critical illness. Nothing at all was ever mentioned to them. And it wasn't until I turned around and went, so if something happened to you and you couldn't make your mortgage payment, someone was ill, or, somebody couldn't work, for instance, like, what are you going to do? And they both just looked at me with these eyes and just went, I don't know.
It's because it's a topic people don't want to talk about, because it's morbid and people don't like talking about getting ill and dying. But it's really important. Everyone's going to die. Well, 1 in 2 people will get cancer. So the chances are that someone or someone within your family is going to get ill, so you've got to prepare yourself for it.
When it comes on my side to looking at building a solid financial plan, you have to put all your safety nets in place first. People normally want to go from earning an income to investing in something really radical and out of the way. They don't do the base steps of building an emergency fund, making sure that their income's protected, the house is protected, and this, that, or the other, and then start building their wealth on top of that, start investing in certain products and things depending on their situation. You've got to build that solid base all the time and make sure that that's all protected for if the worst is to happen, and then you can build solidly. Because if you're building without that safety net, you're going to have to dip into the stuff that you're trying to build to cover if there's ever an issue.
Yeah.
So do you always look at protection before you look at any investment?
It's just a hierarchy of needs. Protect the income, protect the family home, make sure we've got all that done, make sure we've got emergency funds of, as a standard, I try and tell people 3 to 6 months of cash readily available in case something goes wrong. Obviously, people have different things. Someone who wants to keep X amount over here. Some people's a bit more risk averse, and then go from there. Right, we've got the base built. Now we can work on building the wealth and start doing the other things and investing, because we know that we're not going to have to dip into this fund that we're trying to create for whatever it is at a later date. If something goes wrong, we've already got those safety nets in place.
Perfect. We've got another question here for you, Craig, I think. Am I better paying extra into a private pension or paying the extra into an ISA instead? Also, what are the tax implications or tax relief for each? And that's from Warren.
I know, Mr. Langford. Hello, how are we doing? So whether it's paying extra into a pension or paying into an ISA, it depends on what the goal is when we want to access the money. That is the big one with that, because obviously if you're paying to a private pension, you can't touch it until 10 years before state pension age. So 57, obviously going to creep up, I thought, depending for anyone that's younger that's watching. They're talking about raising towards 71, aren't they, within the next 10 or so years. So that means that you won't be able to touch a private pension until you're 61. So if you're looking to retire before that 10 years, so for Mr. Langford, it'll be 57, knowing his age, because he's only a young pup. So at 57, he could touch his pension. If he wants to retire before then he could do with a bridge. And that bridge could be the ISA. And the tax implications are, with the pension, you're paying in. You could pay out your salary, or work if you're an employee. If you're an employee, you pay out your salary, it goes into the pot. Your employer pays in. So that's a cheeky little bonus onto a little pay rise on there. So which is normally, you get a total of 8%, whether it's 5% employer, 3% employee. Either way, minimum of 8%. And then you get 20% tax relief on it as well. Okay. And if you're a high rate taxpayer, so if you're paying 40% tax, you can claim back another 20% on through self-assessment on that side. And then when it comes out the other side, you can touch the pot. 25% tax-free. The rest of it is taxable. Okay. But that's 10 years before state pension age. If you want to retire or touch the pot before then an ISA would be a good one to bridge that gap, because you're paying out of what you've already paid tax on, so out your income. It grows in the pot. It can go into exactly the same environment, just in a different wrapper. And on the way out, the money's tax-free. So you get better access through the ISA for earlier, but you don't get the tax relief on it on the way in, and you also don't get the added bit from the employer going in. If you're a business, you can take money straight. So if you're a limited company, you could take money straight out of your pocket to reduce your tax bill and put that straight into a company, into your own private pension, as is now.
Corporation tax relief.
Corporation tax relief, which we all know, corporation tax 19% up to 50 grand. Anything over 50 is at 25. It's gone up to. So that's a 39% increase in tax, which is a big hit. So if you're earning X amounts and you don't need to have all that money sat in your company account, you could move some over. Bring the tax bill down.
Sounds good. That's sort of what people are wanting, I think, isn't it? We've got Irene's back. Would you say have all products, critical illness, life insurance, mortgage insurance on top of the death in service?
Yeah. Near enough all my clients get a multi-benefit policy with a bit of everything in.
Yeah.
That way, I mean, it depends what the individual needs are. So obviously we look at what people need and what people want to cover, but having a bit of everything, it's not like gambling, but if you were playing roulette and you just had one number on the board, the chances are it's going to be harder to win. Same with this. If you've got lots of different products, you've got more chance of claiming if something happens. Whereas if you've just got life cover, you've got to die. So you want to cover as many bases as you can. So yeah, a bit of everything, in my opinion.
Yeah, I totally agree. Bit of everything, and it's all circumstantial. Depends on the individual and where they're at.
Yeah.
Depends on what they've got, background, budgets. There's loads of variables to it, but the more things you can cover, the better protected you are. But we know there's a ceiling on what people will pay for certain things, and everyone's different on budget wise. So sometimes you might forgive one to make sure you've got the other one, to make sure that the others are covered. So make sure you got especially as a minimum, to have your mortgage covered by critical illness and life is an absolute no-brainer on some sort of decreasing term. It makes sense, and then work over and above if you want to.
Perfect. Henry Henry Shaw, what do you think of index fund investments like Vanguard earning 7 to 10% long-term decades?
It's about standard, isn't it? So you're looking 7%, 7 to 8% over the long term. Yeah, we know that the markets are going to fluctuate up and down without knowing the breakdown of what's in every single fund, which you can't do unless you get everything that's going on behind. And they change with them being indexed. Obviously, what's going on, what's being traded, but 7 to 10% over the long term means that every 9 years, your fund is going to double in size without adding to it, roughly. So it's not bad to go. And if you're continually paying in on a monthly basis, you're going to get the benefits of the highs and lows of the markets for the pound cost averaging. So, yeah.
So if people don't know what an index fund investment is, what's that, Craig?
It's just like, so you got different indexes around the world, haven't you? You've got, so you'd have to break it down and go, oh, with the Vanguard, there's different ones set on different years. So you can have one that's linked to the S&P 500. It's linked to, just in some pop up at the bottom of there. Yeah, so there's all different funds around the world, NASDAQ. So they're just linked to those big funds around. So it's controlled in that instead of having loads of tiny little shares to little companies where people can pick. So when they come to invest, they can go and gamble on one.
Like Google, for example. Like go and buy shares in Google.
Oh, but yeah, it's like betting on black, isn't it? They're betting on one thing, whereas you've got a spread bet over multi-funds all in one place. So different portfolios do different things, but the return rate on that, yeah, you wouldn't complain. Obviously, it changes. It goes up and down. If you look over the past couple of years, returns in funds have been down, but over in America at the minute, they're on the boom, aren't they, with the S&P, looking at the technology and stuff. That's on a boom at the minute. All your Googles, your top 7 are driving that industry up. But there's highs and lows, same as every market. It's a long-term investment, isn't it?
So Henry's just added there, world index funds do a broad range of many, yeah.
Many, yeah. I don't really understand the question.
Yeah, I don't know. So yeah, if anyone does have any questions, as you can see down at the bottom, there's an orange little ticker going across telling you about all the things that Craig could answer questions on for you regarding to pensions, investments, tax planning. Also, Chris is here, so anything mortgage related. Does anybody have any first-time buyer questions? Anything related to their situation at the moment? How long are you in a fixed for? Are you looking to possibly remortgage? Do you know how long before remortgage should you start looking? Those sort of questions. Please feel free to drop them in the comments. The guys are here this evening to answer anything that you've got. And also, if you are just stumbling across us on any of the platforms, please feel free to give us a follow or a like. We would really appreciate it. And if there is any questions that you have and we don't manage to get to them, please ask them again, as the feeds do go quite quickly at times. And if you do ask a question and the guys ask for more information, or they think it's easier if you're just going to drop them an email, please do drop us an email to admin@gomortgage.co.uk. And then if it's a one for Chris, we'll give it to Chris. And if it's one for Craig, we will pass it over to Craig and he will get back to you as well. So yes, please do feel free to ask away anything that you may have this evening. It's one of our first topicals for the series, and we're going to do lots more of these as well. But whilst we've got Craig here, Craig is a wealth, I'm going to call you a specialist. Is that right, Craig? Should we call you a specialist?
Be a specialist.
Why not?
Special.
Yeah.
Just special.
Right. Okay. So Irene's just asked a quick one. Do Hargreaves and Vanguard do them things?
Loads of platforms do, don't they? They offer different different portfolios, this, that, and the other that you can do. I don't deal with those. The way that I work is I sit with my clients, go through where they're at, where they've been, where they want to be in the future, and come up with a strategy that suits them. So you sit and work out, look at the attitude to risk for the person, look at the attitude to risk for that investment alone, timescales, stuff like that, and work out on that side. But yeah, there are platforms where you can just go on and click and send your money into whatever it is that you want to do, whether it's pension, ISA, stuff like that.
Perfect. Okay, we've got a bit of a long one here. This one, I can tell you. Oh, where have they gone? Oh, I've lost who it was now. But they've said, not sure if you can provide any advice on this. I'm in the process of remortgaging with transfer of equity involved. I am removing my brother from the deeds with his permission. I used his name to secure the mortgage. Now that I am taking him off, am I liable for capital gains tax? Property was purchased for £150,000 and now it's worth 350. It's residential premises and we both live here.
Residential, that's the main thing. If you're living there, there's no capital gains.
No capital gains.
That was easy.
Right.
That was easy. Okay,
It was
perfect. Well, no, I like it. Simple, like it, yes. Henry, if a first-time buyer is on a low income, under £500 to £1,000 a month to pay for a mortgage, but have savings of 30 to 50, can you still buy a home?
Realistically, yes, on paper, but realistically, it's not going to be affordable because just with like the ONS data for normal spending, you're not going to be able to borrow much. You need an income. It's all based around affordability. So, I mean, the answer is probably no, Henry.
Yeah.
The fact that you've got the savings is a bit of a red herring. So, great that you've got savings. If your income increases, then obviously you're in a strong position because you've got a decent sized deposit, but you need the income for affordability.
Okay. Good question. What is the best way to leave wealth for kids?
Oh, it all depends on your situation, but pensions are pretty good. Pensions are a good way to leave wealth because obviously private pensions and pension pots sit outside your estate. So that goes through. But without knowing your situation and going through everything that's there, it'd be a minefield because obviously there's different ways you can put things into trust and this, that, and the other because of inheritance tax. So it all changes.
You could just have a basic life policy, couldn't you? Written in trust. Yeah. And you could leave whatever amount of money you wanted, 50 grand each, 100 grand each, £1 million each, write it in trust. It'd be exempt from, it'd be outside the inheritance tax.
Yeah, it all depends on the individual situation and where they're at the time. If we're looking at moving assets because you've created wealth to move and you're not gaining anymore, to move it outside of the estate, or if we're just looking to leave a bit of money, like Chris said there, using a life policy.
Okay. Next question. Why are landlords exiting the buy-to-let market? I've saved enough for a 20 to 25% deposit. Well done for that. As an investment for later in life, but it's putting me off. Everyone telling me it's a nightmare now with tax complications.
Well, I mean, obviously, for a lot of older landlords that have been used to doing it for a long time, like my dad, for example, he's at an age where, yes, the tax changes, the tax has complications that you're putting. It's changed over the last few years. So for a certain age group, it's probably a good time for them to be exiting the market with all the changes and then getting to a point where they want less stress in their life. There is still a lot of people buying buy-to-let properties, so I wouldn't let it put you off. If it's your first one, you won't know any different anyway. So for you, it's all going to be new. And
it's a long-term strategy. It's not short-term.
Yeah, exactly.
And if you're doing one, I'd look to do more than, you've got to do more than one. You've got to build a portfolio really to make it viable over time. It's a long-term, it's a business. It's not a one-off. If you're going to do it, is the way that I'd look at it sort of now with people. It's not like it used to be. Can I say all them time ago where they just did it and people have done really well. And because of all the tax implications and changes and stuff like that, people don't want to become companies and do it in certain ways because they've done it in a set way for 25, 30 years. Now things have changed. There's a few more hoops to jump through, but if you've not done it and you were never part of the old school, you're part of the new school. If you commit to it and work hard at it and make sure that it stacks up, that's the big one with the buy-to-lets. Don't buy silly properties that are too out of price. Don't spend over the odds doing them up, and make sure that you're getting a good yield and you've got good tenants. Yeah, it's all risk.
Take the emotional side about, and remember it is like a mini business, isn't it?
Yeah, it's definitely business. You got to think of it like that.
Perfect. Thank you. I hope that answered your question. We've got one here. I've recently gone self-employed. Should I still be paying into a pension? And realistically, in what trading year would I start doing this?
As soon as you can.
As soon as you can afford to. Same as any pension. Yes, you should be paying into it. But if you're self-employed, definitely. Because it's going to reduce your income tax bill. Or if you're a limited company, it's going to reduce your profits. So like we spoke about earlier, you can take it straight out of the profits on that side of things. So that's going to help for tax efficiency. But the sooner you start, the less you've got to put in. Yeah, so if you start at age 20 saving into a pension, you could put £200 a month in, and you could carry on doing that on average all the way through, and you'll have a nice sized pot. Whereas if you're in your 40s and you've not got a pension pot, you're going to have to, depending on what you need and what you're looking to achieve when you retire, you're going to have to put more sizable monthly amounts in. So putting anything away is better than putting nothing away, because we've got to have one eye on the future. But the sooner you can start, the better. Trying to encourage people to do it all the time.
Perfect. Henry's replied, oh, that's sad. Guess I'm going to have to stick to an ISA savers for a deposit and find a way to increase my income.
Yeah.
Sounds like a good idea.
Definitely.
Irene, I need to write a will. Can I contact you? We've just put the will section of our GoMortgage page of our website, should I say. There is information on there in regards to wills.
You can drop us an email as well.
Yeah, drop us an email to admin@gomortgage.co.uk. But also, we do have a topical evening coming up for wills. Let me just refer to my notes as to what date our wills is. It's the March 29th, Thursday at 8 o'clock, leap year day. We are going to have our wills specialist for that night. He's going to be coming on. So if anyone does have any will questions, make sure you join us on Thursday the 29th of March. Okay, there was a comment up here that I'm going to put on. Chris, you come across very serious on the videos, but all your responses I have seen from you are very friendly. Sorry if this is a personal question. I've been following your page for a while, and it's a very helpful page. How long have you been a mortgage broker?
I'm really not very serious. How long have I been a mortgage broker for? So I passed my exams when I was about 18, 19, and I'm 41, so 20 odd years on and off.
You're only 41?
Piss off.
That's a good answer, isn't it? That's a good one there, Craig. Well done. Okay, moving on.
Because everyone's used to my silly shorts where I'm being silly all the time, isn't it?
Yes.
Got to be more serious on the more longer videos, apparently.
Yeah. Yes. Denise Georgina Lee. Buy-to-lets are really hard to make the numbers work at the moment if you are looking for more than paying the mortgage off.
I think you're either looking to pay the mortgage off or you're looking to create an income. I don't think you can pay the mortgage off and create an income. So you're either having it on repayment and you're getting it paid off, or you're doing it on interest only and you're creating that income for yourself.
Yeah.
So I think you go down one or two routes when you're doing a buy-to-let now.
Yeah, especially with the way that the rates changed over the past few years. Yeah,
Yes, definitely.
You're either paying off just the interest and it's ticking over and you're taking the money out of what you're charging rent-wise as an income, or you're playing the longer game and using it to pay off the mortgage, pay off the capital and the interest, and you're not getting as much in your pocket directly right now. Yeah.
Some people don't even take it as an income, they just let it build up so they can buy another one, and that's how they buy more.
Yeah, that's how they recycle and do it, isn't it? I think that's on. Yeah.
Okay. Next question. Is there a strategy either of you recommend to start a portfolio if I only have the deposit for one buy-to-let property? People talk about recycling cash flow, but it makes no sense to me.
That's what we just.
The easiest way to do it is to buy right. So buy a property where you can add value to it straight away, whether that's things like kitchens, bathrooms, central heating, windows, whatever it is, the way you can add value. And then when you come to remortgage, or if you do a tracker and you can remortgage quicker, then potentially, if you've added value to that property, you can then remortgage, pull someone out and buy another one. Or, like we just said, go on interest only, let the money build up, and then obviously pull that money out to buy another one.
Yeah.
Okay, dokes. Rhiannon, sorry, I missed the first part. So can pensions be beneficial for tax purposes?
Yeah, depending on who you are. So it's classed as an income reducer for everyone. So if you're employed and earning 55 grand and paying that 40, you fall into the 40% bracket, you could put an extra 5 grand into your pension and bring yourself back into that lower tax bracket. If you're a company, definitely. Obviously, you can move it straight out your profits into a pension. So you're lowering your tax bill there, which is it's always nice, but it's got to be right for you at the time, because it depends on the situation, especially when you're taking it out of your business and stuff. Do you need that money in your hand? Is it worth paying the tax because you need that cash in your hand now, or can we move it to a place that we can't touch until a later date? So there's just a few variables, but yeah, tax efficient is what they are. Pensions are tax efficient.
Okie dokes. Thanks for that. Here we go. Are there any other cheaper options from a bridging loan, as their interest rates are too extreme if you decide to sell your property, a house example?
I mean, bridging is short-term lending, so it's always going to be more expensive than anything else. And I mean, your two options when you get a bridging loan is you're either doing the property up to renovate it and sell it and make your profit out of it that way, or your exit strategy is to obviously refinance it to a buy-to-let to rent it out. Is there any other options? Not particularly, no.
Okay.
Unless you know something different, Craig.
No. Yeah. No.
No.
I was just thinking, going through it, I was like, no, there's no way around it. If it's short-term loan, it's always going to be a higher rate. It's just the way it is.
Okay. Michelle Ramsey, how does paying child maintenance affect the amount you can borrow for a mortgage? Does the age make a difference? The kids are 15 and 18.
So it's going to reduce what you can borrow. The lender is going to take it as a commitment. So if you're paying out child maintenance, it's going to reduce what you can borrow. If you're receiving child maintenance, it can increase what you borrow. Some lenders, like the 18-year-olds, for example, if that's going to be finishing within the next 6 months, lenders would probably dismiss that, like they do with most credit commitments. If you've got like a loan that's going to be finishing in the next 6 months, they'll disregard it in affordability. So there will be some lenders that would do the same with us. But yeah, it's going to reduce what you can borrow.
Okay. Natalie, can I have a nest pension with my employer and a private pension, or just
text Craig?
Yeah, you can. You can have a private and a workplace one. You just can't go over the threshold of putting in £60,000 a year in total. Simple. Simple as that. Simple. So have a word with your employer now.
Yeah. If he's a decent guy, he'll sort you out. Moving on. Hi guys, great show. Just got a few questions. Who regulates mortgage brokers, and what happens to all the private
brokers?
Well, what happens to all private documents we provide after mortgage is secured? Are you expected to hold all the documents for a set period of time? Thank you.
Compliance questions. So who regulates mortgage brokers is the FCA, and it's very highly regulated. What happens to all private documents? So everything that we do is all secure, so nobody can get access to it. So we have like secure systems that we use. And document wise, we have got to hold the documents for 7 years. Hope that answers all your questions.
Okay.
As a mortgage broker.
Edward Proctor. Is it worth paying a large part of the mortgage off, around 60%, and then reinvesting the savings from the monthly mortgage payment, or keeping the mortgage going and investing separately over the long term? My interest rate is 2.74 until August 2027, and I have approximately 27 years remaining. There's a lot in that.
Depends
I
on what
mean,
you
if your mortgage is only 2.74%, and on average, if you get 10% investing your money, then it would make more sense to invest your money because you're going to be better off in the long run. But Craig, this is your bag, so I'll shut up.
That's how it works. That makes sense. But a lot of people try and pay the mortgage off early, even though they're on a cheaper rate, because a mortgage becomes an emotional investment. And they think, clear that.
People want to be mortgage free, don't they?
Yeah, they want to go, outside out of mind, I've paid that bill off. But like I say, if you're only getting 2.74 on there, you've got a good rate. Then if you can get 7% returns on average, 7 to 10%, your money will grow better putting it into something else. But it all depends on what the what the goal is, what you're investing for. And that's one of the things that I work with my clients on, instead of them just putting money in a box to say they've got money in a box. It's like, what we're doing it for, and then what the aim is, what the target is. Are we saving for? You got to save for specifics all the time.
Financial freedom.
Financial freedom. What's that though? What is it? Everyone's is different.
Millions.
Millions. Oh, just a small number then.
To begin with.
So, Craig, I've actually got a question for you. So if someone who doesn't have a pension right now, they are in employment, or let's say they're self-employed, just for sake, what is the steps that they would have to take to get themselves a pension going? So
to do it with myself, I do a meeting with them. We do it fact find, a bit like you do for a mortgage. Go through the ins and outs, the nooks and crannies of you and your life. I also do a life plan with them to see, we're going to set up a pension, but when do we want it? What do we want it for? How much do we want in this pot? And then we can reverse engineer how much maybe we need to put into this pot to get to where we need to at the end, hopefully. And then from there, we'd discuss, look at affordability and this, that, and the other, and see what we can do. We'd start saving. We'd look at a person's attitude to risk to make sure that whatever we invest their money in is aligned with the individual. So whether if they're inexperienced, normally sit around a medium attitude to risk. If they've got a bit more experience and they've got other backups in place, you could take a little bit more risk because they're a little bit more risk averse. Then from there, once it's set up, every year, I go out and see my clients, make sure that, to talk about what's changed in their life, just to see if we need to change anything, if anything needs adapting, and to make sure that we're still on track to meet the plan. But that plan could change, couldn't it? Because we know, as we all know with life, things change on a daily basis. So that's my job, to adjust the plan and maybe suggest a slightly changing strategy to hopefully get us to the same place. So that's the way that it goes with me. And then also, if we've got the budget coming up in 2.5 weeks, if there's any changes in legislation, any changes go on, it's up to me to contact my clients and go, right, this could affect you, X, Y, and Z, that we can now put X into our pensions, or we can't do this, so we might need to change strategy. So that's the difference between when they were talking before about people being able to do it through different platforms on your phone and working with advisors. It's the same as working with Chris. Chris will help you and go through stuff. You could just click online and go, want a mortgage? And there's no help out there. And you don't really know the ins and outs of what you're doing. Using people with experience and having someone hold your hand is nice. And like, it's just a little bit more secure and personalized.
Because me and Chris have spoke about this. Like, this is something that somebody of my age, like I'm 38, but none of this was ever taught to us in school or mentioned to us as sixth formers, or there's nothing given to you coming through education for financial planning, talking about credit, talking about borrowing, talking about mortgages, talking about putting yourself in that best situation for when that time comes that you might be ready. So there's a lot of people, and I'm going to say probably a lot of people my age, that are like absolutely oblivious to what they should be realistically looking at and getting done with their money.
It's not even just pensions, though. It's like credit reports, mortgages, pensions. I think it's finance in general as opposed to one even particular thing.
Basic budgeting. So I go out into schools and go to different community groups, and I've taught basic budgeting, financial skills and stuff like that. So the network I'm in partnership with allows us to go out and do that. We've got a full education program to go out, because I was surprised, because I've been into different schools and it is part of the national curriculum, but it's part of their social skills and stuff like that. So it's not one of the big tick boxes for the schools. And when you speak to teachers,
me and Joe spoke about it this week, haven't we?
The teachers aren't confident in teaching it themselves. So go out and because it looks too complex from the outside. So go in and break it all down really simply and break it down depending on the groups that you're in. And teach them how to budget. So I've done it with sixth formers, done a lot of that, where you go with them when they're getting ready to go to university, teaching them how to
and they get that student loan. That student loan. There you go.
Yeah.
There's all that money.
Just a few simple life skills, and then encouraging them that, paying into your pension and stuff like that straight in, because obviously Nest and stuff, if they're employed, they get offered it straight away now. So start paying into it. You've never had that money, so you're never going to miss it. Get it in there. You're saving something.
Yeah, definitely. It's such a big thing, and it was only when I started to look at the process of looking into mortgages and stuff as I've never bought, and it wasn't until I actually said, like, you need to talk to me. Like, I do not understand jargon. I do not understand. I just need it to be laid out in a basic form for me to understand. And if you find somebody that can do that for you, it is a game changer, because then you feel knowledgeable. You feel like you know what you're doing.
Yeah. You just got to break everything down.
It's the same on a broker side, though, Chris, right? Because like the whole jargon of mortgages, rates, deposits, credit reports, who you do that with, where do I get this from, and all the rest of it. It's exactly the same for brokers, really, isn't it?
100%. Yeah, just keep it simple. That's all people want. People don't want to go into a bank where someone's sat in a suit telling loads of things they don't understand. They want someone who's relatable, that can break things down, keep it simple, and just get the job done.
Yeah. It's the way forward. So if anybody does have any questions, anything that maybe we've just touched on, anybody worried about their children, grandchildren, you want to put money away, what's the best way to be doing that in that sense? If you just have any general mortgage questions, but like Craig's here, I think we're probably going to be looking at about 5-10 minutes more, perhaps, guys, perhaps. They're here to answer any questions you've got in relation to. So obviously Craig is from Brewmed Financial Planning. So anything wealth related, pensions, tax, investments, anything. And then you've got Chris from GoMortgage, mortgage broker. So he's here for all things mortgages, remortgage, credit reports. Where do you get your credit reports? Who have you got your credit? Who have you done credit checks with previously in the past? Have you only used one? I know that GoMortgage, they like to, they will only use one, and that's Check My File. Why, Chris? Why do you only use Check My File?
Because, Joy, they are a multi-agency credit report. So if you're just looking at one, it's not giving you a clear picture. Check My File uses Equifax, Experian, TransUnion, so it just gives you a really clear basic overview of your whole credit report, as opposed to just looking at one where it can be massaging your ego. If you think, oh, I've got 999 on Experian, the amount of times we've had people with 999 on Experian and they send us a Check My File at 600 because there's things on different agencies that aren't on the other ones. So yeah, you definitely need to be looking at a multi-agency report, just based on the fact that a lot of lenders are now looking at multiple agencies as opposed to just one. So we need to know exactly what is on your credit file just to be able to do the job properly.
So I've just gone through the hints and tips page from a post that we put up about tonight, and I'm just going to take one from here. Hoping for some advice. How much are others paying for life and critical illness? Our mortgage advisor at the bank has quoted us life insurance for £23 per month and critical illness for £110 per month. We didn't answer yes to any of the questions, so I feel it's very odd. We're over 40. Any recommendations or advice?
Not knowing the values of the house and all the rest of the stuff and the variables, it's too hard to go. But critical illness is going to be more. And obviously, as you get a little bit older, taking out new policies, you're going to fall into different demographics of higher risk without clicking the word yes on something. Just by getting older, unfortunately, we become higher risk as different age categories, different risks, aren't we? There's more chance of contracting certain cancers and stuff at certain ages statistically. So that's what they'll work off. There's nothing to say that when they've offered that, once it goes to underwriting and they go through things, that could change. It could go up or down either way, depending on how you fill out an application form as well, depending on the answers that you give. But if they're just giving you an indicative quote of for X amount to cover a mortgage on decreasing term for this many years, and you're this age, and it comes out with that, then I don't know until we know more detail. Can't give any answers to see if it's right. But yeah, critical illness can be £100 plus quite easily, especially with the price, depending on the size of the mortgage.
Perfect. Okay, we've got a question from Denise. What are the factors / costs to consider on moving multiple properties from own name to a limited company? Mortgages are not due for renewal and around 40% left. Tax implications?
Big one that springs to mind is obviously going to be stamp duty, because obviously
changing ownership.
Limited company's a separate entity, so it's not you. And then all other normal costs. So potentially the lenders we can get free. Well, no, because it's going to be a purchase, not a remortgage. Potentially we can get valuation fees for free. You're going to have solicitor fees, stamp duty costs. If you want to do it before your mortgage product finishes, you might have penalties to pay, which you've mentioned there. So yeah, it could end up costing you a few quid, but potentially you could borrow a little bit extra on the properties in order to cover all those costs. So there is ways around it.
Yep.
Hope that answers your question, Denise.
Yes, it is. I did just find one that I wanted to touch on. Bear with me a second. Currently looking at taking some of my pension to go freelance. A buffer, if you like, to get me back into freelance. Employee is a university, been employed for over 7 years here. Was freelancing beforehand also. Any advice?
Without knowing the scheme, because obviously if you're in a university, you could be part of teacher's pension scheme or whether it's a private pension. I don't know. And it all depends on your age as well, if you're going to be able to touch it. Obviously, you're saying you can touch it, so I'm thinking that you're fall within that category, but without doing full risk on you, you'd think, is it worth touching that to touch your pension now to set up a new business? Or would it be better if you're going to set up another business to look at a short-term business loan and doing it that way and let your pension sit there for when you want to retire and add to it? Because your loan could be part of your business costs if you're going to go back freelance, rather than dipping into your savings and pensions funds. But without more detail and looking at a business plan and your future plan, it'd be a bit of an hard guess.
Yeah. Again, if there's more info that you are looking for, please do feel free to email admin@gomortgage.co.uk. If it's something that Chris can help you with, then Chris will get back to you. If it's something more to do with Craig, then we will forward it on to Craig, and hopefully you can get any of your questions answered more in detail once the guys have had some more information from you. So somebody has actually commented in our Facebook group, in the mortgage advice hints and tips. Can anyone
Making
recommend?
you chuckle.
Yeah, well, no, not chuckle, but it's interesting. So, can anyone recommend a good mortgage broker and conveyancing solicitor, preferably in and around Birmingham, as that's where I am?
And well, we cover the whole of the UK. Someone's already tagged Mark Villas in that one, I can see.
Yeah,
because he's a brummie.
Okay.
Somebody I used to work with at MAB, but we cover the whole of the UK, so drop us an email if you need some help.
Okay. Someone else has put, I've been using Credit Ladder for over several years for rent reporting. Will this help in an application for mortgage?
Not particularly, no. Lenders don't look at rent. I mean, these things where it potentially boosts your credit score a bit, potentially could help your credit score in the background, but as far as the lender's concerned, they're not going to look at anything to do with that. So, nah, not really.
Someone else, can you apply for a bigger mortgage loan to cover stamp duty when you are considering moving house?
Computer says no.
No, but obviously if you've got a bigger deposit, so if you've only got a 5% deposit, then you can't do what I'm going to say. But if you've got, say, 10, 15, 20% deposit, you could reduce what deposit you're putting down in order to save some money to pay your stamp duty.
Yeah,
but you can't borrow more for your stamp duty. No, it doesn't work like that, I'm afraid.
Someone's actually just asked, what is on average an average deposit?
Well, minimum deposit at the minute, really. Forget about Skipton and 100% because it's just a massive red herring. Generally, you need 5%. So anything more than 5%, you're going to get a better interest rate. Potentially, it's going to be a little bit easier as far as things like underwriting. At 95% loan to value, they're going to ask for everything. So they'll ask for the 3 months bank statements, 3 months pay slips. Whereas the more deposit you put down, they might potentially just ask for 1 month bank statement, 1 month pay slip. But what's an average deposit? Everyone's different. I mean, the older people that are moving on, obviously they're going to have a bigger deposit because they've built that up. Your typical first-time buyers are probably like 5-10% deposit, maybe 15% if they're lucky. But generally, they've got a lesser deposit if they're first-time buyers, unless they're in a really, really strong position.
Yeah. And it all depends on the value of the house as well.
Where they're located in the UK.
Yeah, where you live. That 5 or 10% can be big numbers depending on where you are.
Central Blackpool or Central London. Or Aberystwyth.
Or Aberystwyth, like myself. We've got one here. Is it worth transferring a final salary pension? Transfer value has gone down over 50% over the last 3 years. Will it continue to decrease?
No idea if it continues to decrease. That's it, depending on what's going on in the background of it, which you could find out by looking into it. Could you move the final salary pension schemes, old DB schemes as they're called, defined benefit? Yeah, they're set up to give you a income for life. Yeah, to move one of them, you've got to prove there's a lot of things that you've got to prove to be able to move it now. They've made it so hard to be able to move and do stuff. So without getting the figures of what it's worth and projections and knowing everything about the individual, it'd be hard to say, because that's a guaranteed income, isn't it, for the rest of your life? So it's a DBs are a minefield. I have to use a lot of specialists, and there's a lot of different reports now for proof that you're going to remove a guaranteed income from an individual. Yeah, because there's not many of these schemes knocking. They're not around anymore. They're not offered by employers and stuff really anymore. So yeah, there are the hard work and hard things to move, but yeah, should I move it? Who knows, unless we've got all the detail there and can have a look behind the scenes and see what's going on.
Surely
again,
it's like been one of the worst times in history. So everybody's investments have gone down. So surely that is going to come back at some point. So you won't want to move it until it's recovered, if you were going to look at moving it.
Yeah, I'd like to see it recover. Obviously, without knowing where it's invested, that's a different thing, isn't it? Yeah. So it's the answer is
it's fully invested in Northern Rock shares.
Brilliant.
Yeah. Okay. I think this is going to be one of the last ones that we're going to do before that last one just came in. Remortgage process started October 23. Offer from company. Still waiting to complete. How long should it take? Please, deal ended with current company December 23. Now on variable. Very frustrating.
So if you finish on the 31st of December 23, obviously that's holiday season. So you would expect it to complete probably towards the end of the first week back by the time they've requested funds and everything. So we had people that were in exactly the same position, and we set them up before we left for Christmas. And they completed like within a few days of coming back in the new year. So same with yourself. There should be no reason, if you've got your mortgage offer, I take it Secarich that you're using the lender's free legal service. If you are, obviously you need to be getting onto them and chasing them if you've not got a mortgage broker. But yeah, you should have completed early in January. So I can see why you're frustrated.
There you go.
It'd be interesting to know, are you using a broker and are you using free legal service? That would be interesting to know.
Oh, let us know. Good evening. How do you see interest rates going within the next 6 months? Do you think they are likely to decrease?
I hope so, because my mortgage is due in October 24. So I'm hoping that within the next 6 months, they come down quite a bit. Because my rate that I'm currently on is pretty damn good. And it's going to be increasing quite a lot. So, yeah, I mean, I do think that if the Bank of England stays the same for the next few months, I do think they will end up bringing it down a few points. And then I think that obviously the lenders will then follow suit. So I can see the next 6 months rates coming down.
They've come down a bit, haven't they? Since from where they were. They went ridiculous.
Massively.
And to be where they are now, but I can't see them coming down to where they were.
Oh, no, never.
Had a long period of being very low, and everyone got very comfortable and then being very low. And it was good for us all, wasn't it? Especially on the mortgage side of things, on the repayment and what we're doing. But
it was all false though. And the thing is, people got accustomed to false sense. Yeah.
Yeah. All of it moves in cycles constantly. So it's going to go up and down and round and round. But I can't see it coming all the way back down where people want it to be. But yeah, I think it may come down a little bit. But who knows? Because we've got a few things going on this year, haven't we? Changes of government and stuff like that, maybe. That's
why I think it'll come down. I think they'll want to make everything look rosy. So things like the interest rates, I think, will come down a bit, just to buy a few votes, maybe.
Especially with you knocking on the black door going, excuse me, my mortgage is due. Do you know who I am?
Hello.
Get it low.
Can you reduce them, please? Ready for October?
Please. Second Rich has answered your question. Broker, yes, and free legal service.
So your broker should be chasing the solicitors and getting this completed like ASAP. The free legal services are renowned for being crap, but everything should be set up. If they've had the mortgage offer since October last year, there should be no reason why they can't get that completed.
Perfect. Well, I hope that has answered your question. I hope that has answered all your questions this evening. If it hasn't, if you're still unsure of anything, please do drop an email to admin@gomortgage.co.uk, where Chris or Craig will be getting back to you, depending on the subject of your email. If there is anything else that you are looking to do, you're very welcome. We don't know your name, but I presume it's about the rates, but he's just said thank you.
You're welcome.
So, yes, if there is anything else that you are wanting to ask or anything that you think that we could be of any help with, please do drop an email, admin@gomortgage.co.uk. Thank you for joining us this evening. Thank you, Craig. Thank you for joining us.
Massive thank you.
Thanks for having me.
And who knows, Craig could be back another time. If you would come back, that is.
Go.
Oh, that didn't take much. I'll do that again.
I'll be back.
I'll be back. So yeah, if you have just stumbled across, please do follow us on all our social platforms that you are seeing us on. If anyone is on TikTok, Chris goes live now every day. Don't you, Chris?
I thought you were going to say he goes live now and making me do it now.
He's going to follow on. He's going to get on there. No, he's not, because his wife will kill me. His wife will kill me because I've already kept him late. So yeah, Chris is live on TikTok throughout the day. So make sure you are following us on our GoMortgage page, as we are trying to reach 15k pretty sharpish, if not more. So please do follow us along. Craig, are you on TikTok? Are you on any socials?
Facebook, Instagram, LinkedIn. I am on TikTok. Don't use it as much as Chris. I'm not that cool yet. I'm not cool with it.
Is it just Broomhead Financial Planning and they'll find you? There we go. So yeah, thank you everyone for joining us this evening. Thank you very much, Craig. We really appreciate it. And we are back next week. Topic for next week, I'm just checking my notes. Next week, we are doing later life. So, Chris, do you just want to do a quick, what will that involve?
So, the lovely Lee Price will be with us, and it's basically everything in relation to sort of retirement interest only, equity release, and lending into retirement. So, when you're a bit older, what options have you got for sort of extending the term or going on interest only, or even releasing equity from your property to be able to use it and spend it?
Okay.
Basically.
Perfect. Well, hopefully you guys will come along and join us for that as well. But thank you, everyone. We shall say good night to you all. Thank you, Craig, once again, and we will see you in the next one, guys. Bye-bye.
See you later.